about Mexico, the new plant that they announced there that is located there? How critical is that just in terms of Tesla diversifying its supply chain and really getting ahead of any potential types of issues?
Well, also it's about a sub $30,000 car. I mean, you're not getting a sub 30K car if that's being built in Europe or Austin. And I think it's sort of carrot and the stick. That's what everyone's waiting for here. But because to get to, as you talk about, some of the longer term goals, you need to be mass market, you need to be sub 30,000. But then
many believe Tesla's success hinges solely on achieving full self-driving capabilities, but that's not necessarily the complete picture. Tesla could see significant growth even if full self-driving doesn't come to fruition. Of course, full self-driving technology would undoubtedly enhance Tesla's valuation, but it's an addition, not a necessity. Remember, Tesla started as a car manufacturer before it stepped into the AI sphere. In this video, we'll analyze Tesla's financial landscape and project potential profits once its planned global factories are fully operational. Here's an interesting prospect. Even without factoring in the potential impact of Tesla's innovative 4680 batteries or any advancements in AI and robotics, Tesla's stock price could potentially triple by 2026. How could that happen? Let's dig into the numbers.
From $2,000 to $3,000. We'll learn more about how this year's price cuts have impacted the bottom line because Tesla is due to report quarterly results after today's closing bell. Tesla is, of course, reporting those results after the close, and for a preview of what to expect, we want to bring in Garrett Nelson. He's the vice president and senior equity analyst at CFRA Research. And Garrett, you've got a strong buy on Tesla. What do you anticipate hearing today? What do you hope to hear from the company?
Sure. Thanks for having me. Tesla has a tremendous track record recently in terms of earnings execution. They've beat now in 13 of the last 14 quarters on the bottom line. And so I know, the price cut announcements have given a lot of investors anxiety, but we think really the net impact of that is that EPS growth from last year to this year is going to be sort of flattish. They earned $4.07 last year. I think you're coming in this year. I think you're going to end up seeing earnings sort of flattish with that number. But I think what we're looking for is that the long-term story remains intact. Looking out to next year, we're looking at 38% EPS growth year over year. We know they're about to start producing the Cybertruck. They're about to break ground on a new factory in Monterrey, Mexico. And they're still ramping up the new factories that opened last year in Austin and Berlin. And so really, everyone's looking for, or the bulls at least are looking for, that the long-term story remains intact.
Today's prediction on Tesla primarily orbits around the possibility of the car company's Model Y hitting top production levels at its Berlin and Tesla's factories. This is coupled with the fact that the Cybertruck, a symbol of Tesla's future ambitions, is expected to be in full flow, and Mexico might churn out 1 million units per year, along with the Shanghai and Lathrop Megapack factories. If all goes well, the surge in Tesla's stock could reach a thrilling range of 500 to 600 in less than 3 years. Hello, everybody, and welcome back to Tesla Tomorrow. A span of 2.5 years might appear lengthy, but for a return on investment of this magnitude, it's barely a fleeting moment. The trajectory charted in this video is deeply rooted in electric vehicles and megapacks, two fields where Tesla has showcased its undeniable expertise. The potential future sure seems exhilarating, but what challenges could impede this trajectory? Let's find out. But before we start, if you like this type of content, make sure to hit that like button, subscribe to our channel, and turn on notifications to stay up to date on everything happening with Tesla. The essence of this substantial valuation is the estimation that Tesla could amass approximately $35 billion annually in earnings. This, with a P/E ratio of 50, would translate to a market cap of $1.75 trillion or approximately $550 per share. However, this estimate is built on a 20% margin on these sales. Given that the economic turbulence might have subdued by the time these projections come into play, it's fair to assume that interest rates could see some decline. For Tesla to significantly increase revenue through sales, its production level must increase. This means that its Berlin and Texas factories must ramp up production significantly, which requires a marked increase in battery production. There's a potential hurdle in Tesla's 4680 batteries not reaching full production capacity. At present, the growth of Tesla and the overall EV market is restricted by the battery supply. However, Panasonic's alternative 4680 cells, independent of dry battery electrodes, could be a saving grace. Likewise, the LFP cell's feasibility and the potential of CATL boosting their production in the foreseeable future are factors not to overlook. Fortunately, Tesla's supply constraint could ease with the emergence of new battery factories from industry giants such as CATL, LG, and SK Innovations. These factories, with their capabilities of producing hundreds of gigawatt hours per year, should mitigate the shortage of batteries. Tesla aims to produce around 4 million EVs annually at its factories, which will necessitate approximately 250 gigawatt hours of cell production each year. Therefore, the combined power of CATL's new factory in Shanghai, the potential Tesla-CATL joint venture for a new LFP factory in Texas, and Panasonic's 4680 batteries should actually suffice. Given the need for 80 gigawatt hours a year for megapacks, even after considering this allocation, there should be enough cells, particularly when other new cell factories are slated to be operational by 2026. But the vital question that arises here is, can Tesla upscale its manufacturing to satiate the growing demand for EVs? Well, this is very possible, although the car company will have to be particularly invested in ramping up production at its facilities. Tesla has proven its manufacturing abilities at its Gigafactory in Shanghai, and investors are hopeful that the Berlin and Texas factories will replicate this success, given adequate battery supply. Tesla's opportunity for lithium mining is another important catalyst for its growth. Lithium is the key critical material in lithium-ion batteries that power the electric vehicle revolution, and Tesla is planning to have a refinery for this. Elon Musk, who described the business of refining lithium as minting money, also encouraged other startups to get involved in this venture. Musk said during Tesla's Investor Day that the refinery will produce enough battery-grade lithium for 1 million electric vehicles by 2025, which would make Tesla the largest processor of lithium in North America. Tesla will continue to rely on existing suppliers like Albemarle and Livent as it aims to reach its 2023 sales goal of around 1.8 million cars globally. According to Musk, the company aims to finish construction on the refinery next year, with full-scale production slated for 2025. Note that this analysis doesn't even factor in other potential game-changers like the semi-truck. Although it may take a while, especially as 4680 cell production issues linger on, considering the speed at which Tesla operates, it won't be surprising if the semi-truck hit the assembly line by 2025, providing a further boost to the stock value. Similarly, this valuation is focused solely on Tesla's tangible offerings, namely their vehicles and energy storage units. However, Tesla's magic extends beyond automobiles. It is also a tech company with significant bets on AI and robotics. Tesla is heavily invested in these businesses that in and about 2.5 years from now, the tech company is expected to have made significant strides in both full self-driving, or FSD, and robotics. Given the progress Tesla's AI has already made, it's not far-fetched to expect monumental progress over the next few years. Tesla's future glows bright, supported by its strong manufacturing abilities, strategic alliances, and relentless tech advancements. While the journey ahead may be filled with hurdles, the potential payoff is monumental. As a long-term investor, you can anticipate Tesla's unfolding growth story. And although the journey could be long, it would be worth it in the end. How much do you think Tesla stock will be worth in 2026? Let us know in the comments section. If you would like to know what Tesla has been up to these past few days, go ahead and click on the next video on your screen. See you there.